Hi, it's Elgin Walker from the Elgin and Pilar Walker team, real estate advocates for the consumer. And I want to talk real quick about loan modifications, short sales, and foreclosures. One of the things I want to talk about in loan modifications is this, is there's a conception out there, in my opinion, a misconception, that number one, you get a loan modification, you owe $500,000 on the property, you stop making your payments, and once you stop making your payments, the bank automatically wants to talk to you about doing a loan mod, and they will take you from that $500,000 you owe against the property, they'll knock it down to $250,000 you owe against the property, allow you to make payments, and they're going to do this with a smile on their face. Exactly. That's not happening. Okay, that principal reduction, that portion of it is not happening. And you also must really be careful about stop making your payments on your mortgage, particularly if you can afford it. Because if you can afford your mortgage payment, it doesn't mean that a loan modification is not an option for you. But I can tell you this, if you do stop making your payments on your home, if you're able to refinance it or anything else like that, you're now down for 12 months. They're not going to even look at you unless you have 12 months consecutive on-time monthly mortgage payments. They're also not going to look at you if you want to buy another home. What if you wanted to buy another property and maybe rent the one you out? You know, you're trying to redo your circumstances. If you get behind that payment, they're not going to do it. It just kind of blows you out the water. So that's strategy bad number one. Strategy bad number two is, you know what? My property is worth less than what I owe. I'm just tired of living here, so I'm going to stop making the payment. I'm going to walk away. It's going to be a foreclosure, but a big deal. Everybody's doing it. Everybody is not doing it. This is not an everybody doing it problem. Now, is there a section of our total society that is in trouble? Absolutely. But let me tell you something. Real estate is a localized market. Localized meaning that what happens in Valencia or Saugus or Castaic, there's no bearing on what happens in Idaho, Massachusetts, New York. These are all different markets. The only market that is relevant is the one that you're living in. Now let me tell you this, when we talk about short sales. Short sales, although there's nothing short about the process, sometimes when you're in something, you have to take a couple of steps back to make 2 or 3 steps forward. Look at short sales as nothing but a way to readjust your family situation, and we will be able to come back out and purchase another home, probably at better rate and terms, at probably a better price point than what you are currently in right now. That is the short sale strategy. But I also want to tell you this. If you happen to live in an area that I'm servicing right now, the real estate market is on fire. Yeah, I'm taking that from Alicia Keys. Real estate market on fire. Yes, it is. And I'm saying that to you is because homes right now, we can't keep them on the market. As soon as we put them on the market, they sell. The majority of them sell for their list price or over their list price. And they're selling in multiple offers. So there's some of you out here that are thinking you have to short sell your property, and you may not have to. Or you may have to do a short sale, but it's not nearly as bad as it was maybe 6 months, a year and a half ago. So I say that to say to you, you have options. Contact us directly. Let's look at your situation. Let's determine where you're at. Let's see what we can do to help. As always, in closing, remember that no matter what you're going through in life, it is truly a temporary condition because it's a fantastic life. God bless them. Thank you for listening.